Hello everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, May 2nd, 2019, and we are now in the final hour of today's trading. This is the hour that I feel most comfortable making my trades because I feel that the closing price of the day gives you the best confirmation of price. So the format for today is first of all, we're going to run the legal disclaimer, which is 40 seconds, and then we're going to come back. We're going to take a look at the major averages, and we'll see what's going on there. And then we are going to look at my current positions, and we're going to go over why I got in them, how I'm phasing out, and what we're going to do with them going forward as far as trailing our stops or getting out to the downside. After that, we're going to turn to my watch list, and we're going to go through all the stocks in my watch list, and we're going to analyze it. I'm going to break down if something looks interesting for the end of the day to possibly take a position in. And then when we get done with that, and the market closes, then we can do some questions and answers. So if you have any questions about what I'm going to be talking about today, feel free to, after the market closes, feel free to ask me, and I'll do my very best to answer your question. And or if you would like me to look at any particular stock, we could do that, and I could give you my opinion on that as well. So that's the plan. I appreciate everyone tuning in today. It's nice that we've had a consistent group coming in every day, and it's kind of fun. And I hope that you're learning something. I hope that you're learning something new every day. So, okay, we're going to switch over, do the quick legal disclaimer, and then we will be back shortly in about 40 seconds. So stand by, and we'll be back.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okie dokie. All right, well, let's first of all, let's take a look and see what the markets are doing today. So we had a sell-off yesterday. We had a big reversal bar, a bullish engulfing bar yesterday, and a bullish engulfing bar takes out the high and the low. Actually, here on the Dow, we didn't have a bullish engulfing. See how it was higher, but it didn't quite come back down and take out that low. So that's technically not a bullish engulfing, but I know we had it on the NASDAQ. So okay, but regardless of not having a bullish or bearish engulfing candle to the downside, it's concerning in that we made a lower high than here. Now we've taken out this low, so now we have a lower high and a lower low. And if you remember from yesterday, we talked about distribution. When you make a lower high and a lower low, it's kind of setting you up for, well, a bearish pattern, frankly, right? So it is trying to hold some support here at the 1 ATR channel. That's one standard deviation away from the mean. We'll see if it holds there, but the next stop for me to be interested in, the Dow Jones Industrial, would be down here at the 50-day. And currently the Dow Jones is down 171 points. So kind of a big day. Okay, let's turn to the Qs. Same thing, we did make a lower high and now we're making a lower low. It did seem to catch some support at the 20-day moving average. It's a large bar though. You see the distance from here to here, here to here. These are 1 ATR channels. So this is almost 2 ATR channels. And if you can get a price move larger than one ATR channel, that means you're outside of noise, meaning that's just not an average move. So anyway, we're going to watch this. The NASDAQ is down 25 points. So only about half of what the Dow is down. Okay, now let's look at the SPY. This was the bullish engulfing bar that I was talking about. Yesterday we went higher than the previous bar and we went lower than the previous bar. And that is a legitimate bearish engulfing candle. Today we continued with some of the sell through. Looks like it has rallied a bit back about in the halfway move, did bounce off the 20, which is good. But I would, for me to get interested in the S&P 500 here, I would like to see it close below the 20 or above the 20, or move sideways here for a few days and then go down, reverse back up. So the S&P is down almost 10 points. So it's bearish across the board today. The Russell, just as soon as I said that, no, the Russell did reverse. It was down earlier, reversed back up. This bar here is larger than one ATR, so I'm not too interested in that. But that's what's going on with the indexes right now. Dow down 155, NASDAQ down 22, and the S&P down 8.71. Okay, so let's go ahead and take a look and see what's going on with my current positions. I'm glad to say that even though it is a down day in the market, it is a green day for me. So that's always a nice thing when the market's down, but you're up. All right, just give me 1 second here. All right, so Merck, I did buy Merck back on April 30th, and the reason I bought Merck was we came down here, we bounced off the 200. I actually bought Merck here when we went below and closed back above, giving me a good risk to reward ratio. A small loss to the downside with some nice movement to the upside if I was correct. I did get out here 2 days later for a 2% profit, and the reason I did is we were under 30 RSI at this point. We came up and above 30 and then closed below. Had it closed above 30, I would have kept it, and it did keep on moving. But you got to follow your rules, and that was my rule. So I did get out here for 2% gain. Then we moved up. We moved up to the 50 RSI, and that's generally an inflection point. It's either going to usually go down from that point, but if it has the strength to move up from there, that's a bullish sign. We did have earnings, initially went down and then reversed back up. So the momentum, we were at an inflection point. The momentum showed me that it tried to go down, move back up. Now it's above 50. So now it should have the 50 RSI as some support to the downside. And so I did buy it here. When MACD went positive, we moved across the moving averages, and yesterday we hit one profit target. Today we hit one profit target as well, and it is up on a down day. So I do like, it really catches my eye when I see something that is something that is up on a down day. So this is quite strong that it's up even though the market's down pretty substantially today. So my trailing stop on this at the moment would probably be the upward trending 5-day moving average at this point, since we've somewhat extended away from the entry. We'll have to play it by ear. There's really not a wrong answer here. You could use the 10, you could use the 100, you could use the 20, or you could use the 5. We'll just kind of have to see what happens, take it in context tomorrow and what's going on. It would be great if we could move back above this 50-day moving average, which is the gray line here. If we moved back above the 50-day, then it would be extended enough for me to start trailing my stop at the 50. As price goes in your favor, you should continue to move up the levels of what you're going to consider your trailing stop below you. So if we can close above the 50 tomorrow, that will be my new trailing stop. If we don't get to the 50 and we close below one of these moving averages here, and depending how it's done, I'll go ahead and lock in the profit basically that I took when I phased out. So that's why I like phasing. I like taking something when the market gives it to you. You know, a lot of people just they focus on one point above them, and that is going to be my profit target. Well, what about if it just gets barely to that and then all the way back down? Then you've given up all that profit. So that's why I am really a big fan of phasing out every day when the market gives me something. Because then if it moves down, then it mitigates your loss to the downside. And there's a lot of trades where it can move up 3-4 days, come all the way back down, right to your entry, but you're still positive on the trade. So Merck above 50, I will use that as my new close. If we close down below these moving averages here, that will be my trailing stop. But I am grateful that it is up today on a down day. Okay, SPY. So many of you have heard me talk about this. I'll just go over it real quickly. But I like to buy the SPY at the end of the day and sell it the first thing in the morning. Since 1993, if you would have bought SPY on the open and sold on the close, so you buy it in the morning, sell it in the afternoon, I know it's counterintuitive, but you would have actually had a negative 5.2% return by buying in the morning, selling in the evening. But if you did the opposite and you bought at the close and then you sold the next morning on the open, the return would have been 568% since 1993. So meaning more than all performance came in after hours trading. So most of the gain in the S&P came from overnight. And you can see the difference. The red here is the buying in the morning, selling in the afternoon. The green here is the buying in the evening, selling first thing in the morning. And I mean, you know, it's different universes here. Now, it doesn't mean that doing that is just going to be straight up profit, right? I mean, nothing ever is. You can see that there were moments or times, some years where you had a really bad drawdown. So it's always important to buy a small position size, never buy too much of anything because you never know what's going to happen. I mean, what about if you started using this right here? You'd think it was the worst thing in the world, right? And if you use too large a position size, then you probably could not have stuck with it. But if you would have used a reasonable small position size, 5%, 10% of your trading capital, this would have been a great long-term system. So that is why I buy this every day at the end of the market and I sell first thing in the morning. Give you an example. Yesterday, well, the day before yesterday, I bought here at the close, sold at the open. So I actually made a profit on that trade, missed this entire thing, this entire down move because I bought at the open, sold at the close. Today, yesterday, I bought at the close, sold at the open. It was a very, very small loss. I think it was like 20 cents on the S&P. It was about 20 cents. So, you know, very, very small loss. And I've avoided this entire thing as well, this entire down move as well. So I will be buying the SPY again at the end of the market. And it is positive that we've bounced off this 20-day. But so, yeah, SPY was a small loss today. But since I've done this about 45 days ago, you know, if you match them up, what I have made percentage-wise by just buying in the afternoon, selling in the morning, is several percent greater than if I would have just bought the SPY and held it. And the nice thing is I did not have to go through all of this up and down, right? All of these ups and downs, just buy in the evening, sell in the morning, and I've beat the S&P by several percentage points and didn't have to endure all these swings. So I'm a big fan. So we'll be buying this at the end of the day. Okay, so VIX, there's some kind of mix-up with VIX today in the market. And I'll show you on a different chart. But I did buy this back on April 24th when we went from under the third ATR channel, the stick line, and close back in the channel. And we also had a V2, and a V2, it consists of 3 bars, and the requirements are that the second day has to go lower than the first day, and then the third day has to close above the first day's close. So we had this nice legitimate V2 entry here at the same time that it closed back above the 30 ATR channel. And in addition to that, the S&P, see, the VIX usually goes inverse to the S&P because it's based upon how expensive puts are getting on the S&P. So the other reason that attracted me to this was the S&P kept going higher and higher and higher, and the VIX, although we did have this one stab down day, really was moving sideways. So if the S&P is going up, the VIX should be going down. But when the S&P is going up and the VIX is just moving sideways, that's an indication to me that there's buying in the VIX. And so we bought it here. I got out of 3 profit targets the very next day, which was great. Came back down a little, got out of 2 profit targets here, from here to here. And then yesterday hit another 2 profit targets. And then today, for some reason, my charting software is not printing today's move. I did hit another profit target here and another profit target here. I can show you, let's see. I can show you here. So on the other chart, this bar is not there. I think they switched it from VXXB, and I think they're switching it back to VXX, because if I put in VXXB, there's no data, but it is VXX, and it's the same price. But you can see today I did hit another profit target and another profit target. So I am almost completely out of this position. This was my purchase price down in here. 3 phases here, 2 phases here, 2 phases here, and another 2. I think I have 10% of this position left. So it's been a nice trade, been a really nice trade, and it's nice to have some hedge to the market. Oh, excuse me here. Okay. So yeah, I am almost completely out of this position. I think I have 10% left. I will continue to hold this because it's easy to hold 10%, and there's nothing wrong with it. You can see it is going up. I mean, we did reverse back a little today, but because I have 10%, I'm really not that stressed about it, right? So, but we did move higher than the previous bar, so just that fact alone, I would go ahead and keep this position. All right, what else do we have? That is it. We were pretty light going into today, thankfully. So just recap: VIX, I'm sorry, Merck. We did hit 1 profit target. It's continuing to move up. SPY, we're going to buy that again at the end of the day at the close. The VIX I just showed you, and it is continuing to move up, so I'm going to hold the small position that I have. And that is it. Okay, so let me take a quick look at the markets. So yeah, it's about the same. It's about the same. So now, let me check in here. Hey, we have 7 people watching. How's everybody doing? Thank you so much for coming by. Really appreciate that. Okay. All right, so now let's get on and start going through the charts and see if there's anything that we are interested in today. All right. Okay, so Apple had earnings, moved up strongly. Then we had that big sell-off in the rest of the day, and it did give up a lot of its gains. Not its gap gains, but where it moved up after gap and down. Interesting teaching point here. You see this point right here. You see the 2 lower highs to the right and the 2 lower highs to the left. So, this was the top of the range. This is what was causing resistance. But then when we broke through it, then this used to be support. Now it has become, this used to be resistance. This is now becoming support. So, yesterday William said, hey, would you put more weight on a moving average or an RSI? And I said, ultimately I would use the RSI, but, look for different setups where you have confirmations on different indicators. Well, this would be a good example in that now that this used to be resistance, now it's support. You see how we came right back down to it, and that support did hold exactly where it was supposed to. So the reason I bring up William's question is, if the price got down to here and found support where it used to be resistance, at the same time it was like a 50 RSI, that would be a really good double confirmation to possibly enter a trade. But in this particular case, it did come down to this previous resistance, which is now support, but the RSI is still 68.80. So in a different situation, if it comes down, hits support, also lines up with the major moving average, and it's also like a 50 RSI, that is the example that I wanted to give to William. So, all right. So I'm not interested in buying Apple here. I mean, it wouldn't be the worst risk to reward ratio, because if I did buy it, a close back into the previous range is what I would use as my initial stop. But I'm just not in the habit of buying things up in the 70 RSI range. Doesn't mean it can't go up. It just means the tendency is when stocks and ETFs get into that range, they tend to slow down. Amgen. So, we've moved down. We attempted a little rally. We've moved back down lower, which happens very often. You'll have that break. You'll have a little bit of a reversal, but usually when you have this down move and then you have a little up move, this is where the shorts come in, and that's probably exactly what happened. On the positive side, we did see, this was the bottom of the old range. We did come back down under into a new range to the downside and moved back up. It's not the worst in the world, actually, now that I think about it. And we also went below, closed back above the third ATR channel, and we are to 33 RSI. So now that I look at it closer, it's really not that bad. I would use a close below the 30 as my stop. So we're going to mark that for a possibility later today. All right, Amazon. Yep, you're right. You're right, Bruce. MACD did turn negative also. Hey, Frederick. Thanks for coming by. Appreciate it. Okay, so Amazon. This is a good example. I was talking with my trading partner earlier today about Amazon, and when you get a stock that moves in a nice uptrend, but it's in a high RSI range, you get a little FOMO, right? Fear of missing out. You're like, man, I should have bought because it's moving up higher, but I didn't buy because I didn't have a buy signal, or the RSI was too high. I mean, I understand that feeling, right? I think we've all been through that. But if you look back at, an Amazon or anything like that, if it moves up to the 70, if you look at it in the big picture, you will notice that generally was toppy-ish. That was near the top. Not that it's not going to go higher later, but short term, that was a bit of a top. And what you want to do is you want to wait until it comes back down into value. Again, it's all about patience, being patient, not having fear of missing out. Now we're back in the value zone, and I call the value zone between the 1 ATR and the negative 1 ATR, the green lines. But now that we're back in here, doesn't mean immediately, hey, just buy, right? It's in a zone which is a possibility the setup's there, but you still need some kind of trigger. You still need some price action that to tell you to enter the trade even though you're in the zone. So step one, you need to be in a zone. You need some kind of setup. Step two is you have to have some kind of price action triggers that gets you in, like possibly you close below the 20, close back above 20. That could be your signal. If we move down, move sidewards, stab down, reverse, created a V1, that could be another signal. So let's see what happens. This is too large of a bar for me to get interested. You know, some people might say, well, I'll just buy here and I'll stop out under the 20-day moving average. Okay, you know, that's fine. But that's called a pure moving average play, when you're just hoping that the moving average below you is going to hold. You don't know. You don't have any confirmation. You're just hoping that it's going to. And sometimes it works out, sure. But I feel more comfortable. I like more confirmation when it actually goes below and then comes back up, because that gives me some information that it already tried instead of just anticipating that it's going to hold. Hope that makes sense. Okay, but nonetheless, I'm waiting for Amazon to move sidewards here, go below, back above the 20-day moving average. And if we get down to the 20-day moving average, we also may be closer to a 50 RSI, which would give us a double confirmation. Okay, so Boeing, like here, for instance, you know, here, if I would have bought, if I would have said, oh, I hope that 100-day moving average is going to hold for us, I could have bought here, but I would have had to have sold under the 100 because it actually didn't hold. I like the fact that it went below the 100 and then closed back above. Now I know this has already been tested, right? It doesn't mean it's going to go up, but it puts the odds in my favor, certainly, that we've already in the recent past tested it and it didn't like it. And you can see that would have been a good move. And we also had a V2, right? Here's day 2, takes out day 1. Day 3 closes above day 1. So we had a double confirmation. We had a close below, close back above, and we had a V2 entry. I didn't buy this, but I did actually sell a put that expired. I got all the premium because it expired worthless. And when you sell them, that's what you want. You want them to expire weekless. So where would I be interested on Boeing? Again, a close below the 100 and close back above the 100 would be interesting for me, because if it closes down here and then goes back up, again, we know that there are not as many sellers as buyers down here because it can't hold that. And it did hold the last time, which is also positive. So, you know, be patient, let the trades come to you, don't force them. And again, if you bought here, you're just hoping that the 100 close is going to hold the support, but maybe it's going to close down below and it didn't hold, and then it continues to go on down. So let's be patient. A close back below the 100-day and move back above might be good. And if we move up tomorrow and we create a V2, see how day 2 is below day 1. If we get the 3rd day closes above day 1's close, that might be an interesting play as well. But it's, you know, sometimes where stock is at is just in no man's land. It either needs to go lower or it needs to go higher. All right. Alibaba did have a big day yesterday, gave a lot of it back. Today it's been all over the place. It's an inside bar. It's at a 60-90. I wouldn't be interested, just because for this to really do anything, it's going to have to get outside of this range, either to the downside or the upside. And if it got up here, the RSI would be too high. Well, Caterpillar, big down day. Big down day. You know, for me to get interested in Caterpillar, getting kind of close, actually. You know, a close below the 200 and a close back above might be a possibility, or a close below the 100 and close back above the 100 might be a possibility. The reason I like the 100 here actually is because it dovetails with the 3rd ATR channel, and a large majority of price stays within the ATR channel. It doesn't go above or below. You can see here, hit the 3rd ATR channel, came down. tested it here, came down. So to the downside, if we can break below, back above the third ATR channel and the 100, that might be interesting as well. But I would, consider if we move below the 200 and back above the 200 also. But ideally, I would rather have the third ATR channel with the 100-day. All right, canopy growth. Just checking on the markets here. Yeah, about the same. Canopy growth had a nice move up. You can see it got to the 70 RSI here. Next day it lost it. A lot of people who were in the trade, they kept it over the 70 RSI, which is the correct thing to do. But when it loses the 70 RSI, that's kind of an invisible stop below you. And you can see that would have been a good place to get out. You can see right here on the 70 RSI, just touched it. And that was it. So for me to be interested in this, the bar, it would have to settle down. What I mean is the bars would have to start getting smaller. This shows a lot of distribution, a lot of selling. And if you have a lot of selling in your very recent past, like a day or two ago, that means people wanted to sell at those prices. So it's going to be more difficult for the price to rally. So in order for me to get interested in canopy growth, we'd have to get somewhere down in this range. My gut's telling me the 50 would be the best. So nothing on that. Dow, we talked about that. 2 big down days. A lot of times when you get one big down day, not always, but a lot of times you're going to have some follow through. We're looking at this market in real time, but a lot of people don't look at it in real time. And at the end of the day, they say, "Ooh, that doesn't look good," or they see it on the news. And that kind of puts into their mind, well, I think the market's going down, I'm going to sell tomorrow. And that's a lot of time where you get that follow through. But ironically, that follow through often goes down and then reverses, which, this has a little from the low. Dexcom. We actually did buy Dexcom back here. It was a really great trade. We bought it back here on the 18th of March. And there were 3 setups that happened simultaneously. The first one was we had a low, rally, lower low. See how this low is lower than this low? But you see the MACD bars? This being lower than this should have a lower MACD reading. So technically these bars should be down here. But do you see how it didn't even paint any MACD bars to the downside, red bars to the downside? That means that the momentum of this move was much stronger than the momentum of this move. So we had a double bottom with the divergence. Number 2, we had a V1. This bar took out the previous low, closed back above. That is number 2. And number 3, similar to what we just talked about with Amgen. See how we broke down into a new area? This was the previous range, and we broke out below and closed back above. So, I had 3 confirmations on that trade. Double bottom with a bullish divergence, nice V1 entry, and we had a false breakout to a previous range and closed back into the old range. And that was a great trade. As you can see, phased all the way out. Up to here, at one point, it was almost a 10% trade, and exited here when we lost the 70 RSI. So right now, today, really nothing. It's kind of just all over the place, big range bars, up, down. For me to get interested in this, you'd either have to go higher or lower. So nothing interesting there. Okay, eBay, it gapped up, moved sidewards. Did hold the first day's range, but now it looks like we've closed below it. Possibly price somewhere around the 50-day might be interesting in the future. Etsy, I did buy Etsy here when it closed above this previous range, and then we had a strong close above the 50-day moving average. I did phase out of 2 positions. I phased out of about 20-25% on the way up. The next day I did hold here, because it had rallied back above the 200. But then yesterday, when we closed below the 50, I did get out and took a loss on the trade, even though I did phase out of 25% to the upside. That helps mitigate to the loss to the downside. So, now we're closing back above the 50. Would I be interested in buying it again above the 50? I don't think so. I'm concerned about this big down bar and this big down bar. It is up today, which is positive, but we do have earnings coming up, so I don't think I'm going to pull the trigger on this one. It's possible. It's possible. We'll at least mark it. Okay, Facebook gapped up, down, 69 RSI. 5 below, a good example of being above 70 RSI and waiting for the 70 RSI to come down. And it did happen on this day. We have had some buying today, but we're in front of this big bar. So my gut is this would be heading lower before higher, but who knows? But it's not a good setup here. I need it to go to the 20-day moving average at least. Swiss franc. Big down day. Usually when you get to the end of these big down days, big down moves and move sideways, you might have a little rally up. It's exactly what happened, but now it's come back down again. It's a 28.77. I might be interested in this if it could close back above the 30 RSI, but today, no. GE, I did buy GE here when we closed below the 100, then back above the 100. We took out this previous range. I did know the earnings were going to be here, so this was only a one-day trade, but it was a nice, easy one-day trade. I can't remember how large. Yeah, 1.78 for one day. That was a pretty good trade. Did continue up higher after earnings, but I don't like to gamble through earnings, so not interested there. Gold. We are getting into that double bottom range here where where this is challenging this previous low, and you see how we've gone down, up, down. You see the small amount of red here compared to there. So we are getting into a double bottom bullish divergence kind of situation. I don't think it's quite there yet, so we'll just wait. Google. A good example of why not to hold through earnings. I mean, it opened up 8-9% lower the next day. This is getting into an interesting area. I can tell you that. I would really like to see it close below the 200 and then back above the 200. I think that would be a really good entry point. Let's see what the RSI would be down at this level. In the 33 range. We'll just have to see. It's not interesting to me right now this second, but I want to buy this where I know other buyers are going to be stepping in, and I feel pretty confident that down in this area they will be stepping in, but it's not quite low enough yet for me to buy. It needs to either go higher or lower for me to buy, but I think this is, you're getting a pretty good price down here and good risk to reward ratio. Goldman Sachs, it's having a tough time with that 200-day moving average. HCA moved down sideways, attempted to go up. For me to get interested in this, I'd have to have a 30 RSI to the downside or a strong move back above the 200. IBB, similar to HCA, down, up. Again, 30 RSI to the downside, or possibly a move back above the 100. Intel. So we did buy Intel here, and this was a good setup because we went down below the 30-day moving average, or the 100-day moving average, closed back above. At the same time, the RSI was a 30. That's a good double confirmation. But yesterday, my initial stop was a close below the 30 RSI. And honestly, I didn't want to sell it because it's like, boy, this is so low. But I'm telling you, things that are low go lower, things that are high go higher, and it closed below the 30-day RSI. So I just went ahead and followed my rules and got out, and then today it's down more. So where would I be interested in this? A close back above the 30, that would be a good double confirmation. If we closed, we're under 30 now. If we closed above 30 on the RSI, at the same time closing above the 100-day moving average, that would be a good risk to reward ratio. And further, if we close to the downside here, we close down below the 200 and above the 200, I would also enter that position even though we're under 30. Sometimes there's exceptions to the rule if you have certain kind of setups. And if this went below the 200-day and then back above, I would also enter a long position here. But today, nothing. Russell, we talked about that. Johnson & Johnson, just all over the place. There's just nothing is clear and defined. Coca-Cola got up above the 70 RSI. Now it looks like we're closing back below. So I would be interested in Coke if we were to get back down into the value zone, which is between the two green lines, the plus 1 ATR and the negative 1 ATR. Lockheed Martin, like a lot of stocks, it is gapped up, moved sideways, still overbought. MasterCard kind of had that climax bar there on earnings, and we've gone down ever since. But the good news is that we are getting into back in close to value. This was the previous range here, which acted as support. Now it acted as resistance. Now it's acting as support. If we could get down into this area with 50 RSI at the same time, we're finding some support there. That would be a good entry point, but not today. Okay, let me see what's going on with the market here. Drifting down. 3M, again, it was an earnings gamble that did not pay off. And it's moved down since then. We're at a 22 RSI. We're down below the 6th ATR channel. This one, this one's going to take a while to set something up. And we're just so far down. It's so low. That people are just distributing this on lower and lower prices, so I'm not interested in that at the moment. Altria Group, I would enter this if we closed above the 200-day moving average, especially if we moved up. Like tomorrow, we'd have this higher low, which I really like because people buying here sold here. That probably drove it down, and the reason they bought here, they bought for whatever reason they did, but by the time you got back up here and rejected the 200-day moving average, that is a good place for these people to lock in profits. So that is going to add some selling pressure. But if we're strong enough to hold now and go up, the people that bought here, sold here, they're out of the equation. Those sellers are out of the equation. So a close back above the 200, I would buy Altria. Merck we talked about. We do have Merck. Microsoft, big gap up. A lot of emotions. People want to buy. They don't want to miss out. But, we've lost the 70 RSI now. We're at 61 RSI. Somewhere in here, I would be interested. But again, be patient. Let the trade come to you. Don't try to make something out of it on the day that it's there. Look into the future. Say if it gets down to this area, because then you're not making an impulsive decision. But somewhere down in here, I would be interested in Microsoft. Netflix, inside day, nothing there. Oh, Nike. We did buy Nike here when we took out this previous fractal. Fractal is 2 lower highs to the right, 2 lower highs to the left. We did have a nice strong break above there. MACD went positive. We were not in an overbought RSI situation. It was a good trade. We phased out all the way from here to here. Went straight up. We exited when it lost the 70 RSI. So it was a beautiful trade. We pretty much got the high. Did sell off a little bit more sideways. Now it's going down. So, from here on out, what's interesting? Well, maybe a close back above the 50. I might be interested in a close back above the 50. That will give us a good risk to reward ratio and room to move back up to the top. Okay, let me check something real quick. right there. Okay. Oh yeah, Nike. We just talked about Nike. So yeah, maybe possibly a close back above the 50-day moving average. And if it doesn't get there, then we go back down to like a 30 RSI in this range. I might be interested in there. Philip Morris, nothing there. PayPal, same as the other techs. Interesting though, this used to be the prior support, prior resistance. Now it's moved above. Now it's come back down and almost to the penny. Caught the support there. You know, in that particular case, you could just use the 20-day as a possible stop, but you're anticipating that it's going to hold. I'd rather see it come down, hold, then move back up. The Qs, you know, everything has lost that 70. Now it's coming back into value. So, you know, in the next couple days, we may have some kind of setup on the Qs, but right here, right now, there's really nothing there. Silver is a 32.56 RSI. I would, if it closed below 30 and back above 30, that would get me interested in silver. The SPY, we talked about that. We bought it at the close, sold the open for a very small loss. It is good that we rejected the 20-day moving average. I will be buying that at the end of the day. Square. I was talking about Square yesterday, saying that if it closed above the 200-day, that would be interesting to me because we had a higher low before the previous low, but unfortunately we had earnings, and so I don't get in front of earnings, and thank goodness I did not get in, right, because of earnings. That's an 8% move down. It's a 33 RSI. You know, that is in the oversold range, but just like we talked about before, something goes down, people see the news, blah, blah, blah. We may have some more move down. I'd really like to see this go down below the 30 and then back above the 30. AT&T, almost bought it here, but we missed it by a penny. Did have a nice move. Now it's coming back down. If we can test the 200 again, go below and then back above, I would like that. I would like it much better than this one because now we have a higher low in place. Again, the people that bought here, when it got up here, they sold. That causes selling pressure. That's the negative side. But the positive side is that now everyone that bought here, that sold here, these sellers are out of the equation. So you have a whole group of sellers that are gone, which makes stock prices easier to move up if it decides to move up. TLT, really nothing there. It's at a 50 RSI. 5078 RSI. I would need some kind of V1, V2 trigger. A close below, back above the 50 would be awesome. Tesla had a pretty good move up today, but I wouldn't be interested in Tesla. UNG, you know, if we go down for one more day, then take out this fractal to the upside, I might be interested, but not today. UNH is similar to all the rest of the healthcare. People bought this dip, they sold up here. Yeah, at the very least, we'd have to get above this previous range. Oil, a little interesting. We did test the third ATR channel, close back above the 100 or the 200-day moving average. I would rather see this close below and then back over for me to get interested. The dollar has rallied back up, which is nice. It's right up against that 30 ATR channel. The Visa, again, above 70 RSI, now back down. We are getting into value here, so I need just some kind of trigger, some kind of down and then reversal back up. So nothing today. The VIX, we talked about that. We have that. That's been a nice profit. I did hit 2 more profit targets today. Verizon, pin bar reversal. And a kangaroo tail. Kangaroo tails when you open, have a nice move up, and then give it almost all the way back at the end of the day. Let me switch over here for a second. Yeah, Bruce, Google does look interesting, and also Intel does too. Oh, you're calling it at 200? Oh, you're buying a call maybe at the 200. Okay. Whew. Yeah, energy. That's another interesting one. I mean, we do have a confirmation of a 100-day moving average. At the same time, we're very close to a 30 RSI. I don't like that it moved outside of its third ATR channel though. So I want to see if this can test the 30, then go back above. I mean, this wouldn't be the worst trade in the world because you do have a small risk to reward ratio or a large risk to reward ratio. If we look at this on the weekly, what I don't like is it's lost the support of the 100-week moving average. So I generally like to look at stock charts on 2 different time frames to see if we have some confluences, not only of signals on the daily, but confluences on the weekly as well. I'm not going to buy this here. I'm going to just wait and see if we can close below and then back above to give me a little better confirmation. XLP, consumer staples, big bar up, big bar down, have to at least get back out down in this range. Real estate, it's about flat today. What else do we have? We have healthcare. A break back above the 200 would be my first entry point on this, on to the upside and to the downside. Maybe if we tested this this third ATR channel here along with the 30 RSI. Transportation. I did take the trade here when we moved up, came back down in the value zone, stabbed down, reversed, but immediately reversed on me. So I did have to take the loss on that one. So what do we have possibly for today? Amgen is not bad. Let me just do the numbers on this and see what kind of position size I'd be buying. All right. You know, two things going for it. One, it broke down to a new range to the downside. See, this was the previous range we broke down, but we reversed back up. That is positive. And the other thing that is positive is that we closed above the third ATR channel. So new range, rejected the new range, closed back up, also went below the third ATR channel, closed back up. And we are at a 33 RSI, which is an oversold range. So this is not bad, actually. But I am going to go ahead and just buy a 1/2 position on this. And then my stop will be a close below either the third ATR channel or the 30 RSI. So I am going to go ahead and buy Amgen at the end of the day, as long as it's still above this previous range that it failed at. But I'm going to buy a 1/2 position. So that means, normally I buy a 10% position size. So if I have $10,000 in the account, I would buy $1,000 of this stock. But because it doesn't have as many good signals as I would like, I'm going to take just a 5% position size on this. The setup's decent, but I don't feel like it warrants a 10% position size. All right, what else what are we looking at? Etsy is closing above the 50, but I'm not going to take it. Google, we're waiting for this to come back down into this range. Intel does not look like it's going to close above the 30-day moving average, although I do have my numbers worked out for it in case it, not 30-day moving average, 30 RSI. This is starting to look interesting. Either if it just can close back up above the 100 or if it can go down and test the 200. I actually have some high hopes for this particular trade, but we have to wait until it does what we need it to do, either to the upside or to the downside. And then Energy Select, looks like it has lost the 100-day moving average. This is a tough one, but it makes it a lot easier not to take if it closes below the 100-day moving average, because then I can use that as my entry to the upside. So from a positive standpoint, it's a 32 RSI. It seems like it's holding at the 100-day moving average. On the downside, there's no double bottom over here, and looks like we're certainly going to close below the third ATR channel. Okay, we only have 5 minutes, so let's take a look real quick. So really, the only possible entry for us, or for me, today is going to be Amgen, or possibly Intel if we have a big strong rally at the end of the day. Merck looks fine. Luckily it's profitable today. We had a profit target. SPY, I am going to be buying my regular end of the day SPY position. And that seems like about it. Okay, not as many things to do today. Nice green day though. I am very thankful for that, especially on a down day. So we have 4 minutes. I'm gonna just go ahead and place these trades. So I am gonna buy a 1/2 Amgen position.
Order filled.
Okay. I trade several accounts, so I have to do this over and over. So okay, my Amgen is taken care of. And then that leaves the SPY trade. All right, so I'm going to get that chambered up. I don't have a lot of positions to mess with, so I will be able to just kind of wait for the very last minute. Okay, so we've got the SP, we've got SPY, Merck is still fine. All right, so I'm gonna just, let's see. Yeah, we got an Amgen at 176.15. All right, how long do we have? We have a minute and a half. Okay, what did I just say? We got into Amgen at 176.15. So let's mark that. All right, and then let's just go ahead. What do we have? We have 1 minute left. All right, we'll play this one close. All right, we have 50 seconds left. And going to be buying the SPY. So, all right, about 30 seconds left. I'm just going to go ahead and buy the SPY.
Order filled.
Yeah. And then this is the overnight trade. and then buy it in the other account. And that's it. So we only have a few minutes left here. Oh yeah, that Amgen was a good trade.
Order cancelled.
And that is the end of the market. So hey, listen, before we get to questions and answers, I do want to remind everybody that I do offer private one-on-one teaching and mentoring sessions in the evening time via Skype. So if you feel like that might be something you might be interested in, or you feel it would be helpful to you, just reach out to me. My email and my hourly rate is in the description of this video. So if that's of interest, please let me know. And then also, if you learned something today and if you're enjoying the channel, do me a favor and hit the thumbs up button. It does help with Google, with showing up in search results and so forth like that. And I'm really trying to build this channel so we have a nice community that comes here every day and learns some good principles about trading. And if you know someone that is, has an interest in investing or in trading, please turn them on in this channel by just letting them know or sharing it on social media. So, okay. That's my plug, and now it's over. And, does anyone have any questions today that I could answer? Let me look here what Dr. Jorgensen says. Need to look at Home Depot and Lowe's. Yeah, we haven't looked at those. Let's take a look. Good idea. So big day down yesterday. We lost the -1 ATR channel, which is not good. We did rally today, but Bruce, that's not unusual that when you have a big down bar like this, that you are going to have a possible attempted rally to about halfway of that bar. And that's exactly what happened. That's, when you have large bars down that are larger than 1 ATR, here's 1 ATR, here's 1 ATR, you can see this is closer to 2 ATRs. And, then you attempt a rally and it fails at that halfway. It's kind of Fibonacci stuff, but when you have a big bar and you rally to halfway of that big bar and stop, to me, that's bearish. Now, conversely, if you have a nice big up bar, and then it kind of backfills to about halfway, there's some support at that halfway, and there's resistance. It's a good way to put it. When you have a big down bar like that, you're going to find resistance at the halfway mark. When you have a big up bar like this and it comes down to halfway, you're going to find support there. So I hope that makes sense. Frederick, could you explain V1? Thanks. RTR channel. It's ATR channel. Average true range channel. Yeah, let's take a look at a V1. Let's see if we can find a nice V1. Okay, there's a V2. Let's see if we can find an example of a nice V1. Okay. So Frederick, a V1, there's 2 bars that are involved. And here's day 1, bar number 1. Do you see how bar number 2 goes lower than bar number 1? And not just a little, not just a few pennies, but a significant amount, and then reverses back up. Do you see how this closed higher than that first bar's close? That's the requirements of a V1. Having day 1, day 2 goes down, washes out this low, moves back up and closes back up over the first day's close. Oh, you're French. Parlez-vous français? I assume you do. Let me go into my file here. I think I have some good examples of a V1 that I could show you. All right, hang on with me. Let me see if I can find these. Okay. This is a really good example. Okay. This is square. Do you see how this bar, Frederick, is a V1 because we go down below the petit peu. It goes down below the previous day. This is day one. This bar goes down below this bar and then reverses back up and closes above the close. That's a V1. 2 bars are involved. Day 2 has to go below day 1 and then close back above day 1's close. Does that make sense, Frederick? And then to take that a step further, this is a V2. Do you see how day 1 goes below, day 2 goes below day 1? If this would have closed above here, it would have become a V1, but it did not. So it did not. Yep, this is a V2 now, right? So in a V2, you have 3 bars. Day 2 goes below day 1. If day 2 went above day 1's close, it would be a V1. But because it did not, you can still get in on the next day. Then it becomes a V2. Day 2 goes below day 1. Day 3 closes above V1. So I hope that makes sense. I'm a huge fan of V1s and V2s. Like I said earlier in the live stream, you kind of need 2 situations. You need the chart in the large context to come into a range that seems like a good range, whether it's into value in between the ATR channels at a 30 RSI, at a 200-day. That sets the stage, but that doesn't necessarily mean buy. It's the setup, the big picture setup. Then you need some kind of entry signal in that setup. And V1s, V2s are one of my favorite entry signals because they show me, whether it's a V1 or a V2, that it does go below, has already tested that, did not want to go down any further, and then moves up. So, it gives you some real data. Doesn't mean it's just going to go up, but it gives you some recent data that shows that the market did not like the price down there. Oh, hey, William. Based on criteria required for you to enter a trade, could you say that the majority of your trades are profitable or in a day or two? I think the best trades that people have immediately go their way. I think if you get into a trade and it stalls out and does not move where it does not move in the direction that you want it to, I think that is a bearish signal. So for me, in the money. For me, I would say that majority of my trades tend to go in the money right away. And it makes sense because I'm buying a reversal. When we just talked about V1s, V2s, when things go down and they don't want to go down anymore and they immediately reverse back up, I'm getting into the momentum to the upside. And, that's the reason I'm buying it. I'm buying a rejection of a previous low. And because it just recently rejected that previous low, most of the time my trades go in the money. Now, do they all the time? No. And when I have a trade that I buy and it doesn't do anything, it stalls out, that concerns me. In my experience, if you have 1 or 2 days, if it hangs out for more than 1 or 2 days and doesn't do anything, that's a red flag to me. So yes, the answer to the question is most of the time, I would say my trades do go in the money quickly because the type of setup that I'm buying. I'm buying a rejection of a very recent previous low. I was looking at my statistics for the year and, talking about majority of wins and so forth. Right now, I believe I'm about a 73% profitable trade. So out of all of my trades, 73% of them have been profitable. And it's also important not just what your winning percentage is, but what your risk to reward ratio is. And right now, my risk to reward is I'm making about 1.56 times more than I'm losing, but I'm also in the 70 range on the winning percentage. So I've been very happy with my results and my stats, but winning percentage doesn't mean everything. I mean, you could win 80% of the time, but if you're losing if you're losing a ton more than you're winning, it doesn't matter. So it's important to have multiples of what you're losing compared to what you're winning, but having a nice winning percentage as well. In all your years of trading, what percent could you say goes in the money in a day? Well, just back 65%, 65 to 70%, I think would be a good guess. So let me just check. Yeah, I'm really happy to have an up day today. It's always nice to have an up day today, but it's really nice to have an up day when the market's down. A penny saved is a penny earned, right? So everyone be careful in this market. We were overbought. We've come down. There was a lot of profit people made. Just be careful. Position size correctly. Don't have an opinion like, I think this is the bottom. Don't ever have an opinion, I'm telling you. Because once you have an opinion, you give that energy to it, then, you don't want to be wrong. The ego gets in the way. Just be like water, be fluid, let it do what it's going to do, be patient, let it come to you, and, always position size correctly. So, okay, well, listen, I think I was happy with this podcast today, or live stream. What is it? Podcast, live stream. But I appreciate everyone stopping by today. I hope that helped on the questions. And I really hope that you do come back tomorrow if you're able, and we'll do it all again. And we'll call it a day for now. So thanks again. Hope to see you tomorrow. And have a good day, everybody. Here comes the legal disclaimer, so have fun with this one. All right, see you tomorrow. Thanks again.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.